Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's been a few months, but we're going to look at Tesla today. Sorry that it's been so long, but the thing is, I won't update people with an idea unless I have one. And I've had nothing to contribute to Tesla in months. Since we traded it and shorted it down to the lows, we have yet to re-enter a short side trade. I've been waiting for one to set up, but it's just been elusive. It hasn't come, and I won't enter a trade, off the back of no evidence. And therefore I'm neutral. I'm neither long or short. Turns out I should have been long since the lows, but hindsight's a wonderful thing. So what we're going to do today is we're going to look at Tesla. We're going to look at some counts that are available to us. I've left all of this blank, the corrective phase here that we've been in, which could be correction complete, impulse wave underway, or it could be a continued correction into some other pattern that we're going to discuss. So I've got a couple of counts to present for that, but before we do that, I want to observe the basic technical analysis first for a change. It's been a while since we looked at Tesla, and there's a few things I want to point out that I think are interesting. So I'm not going to get behind the bulls, and I'm not going to get behind the bears either way. I'm not interested in your emotional disposition towards whether you own Tesla stock or not. We're just going to try and remain unbiased, and I'm going to maintain my neutral stance as that's my current positioning. Now for me, if I can't make sense of something, clearly I won't trade it. But there's a good job that there's hundreds of thousands of assets in the world that I can go off and trade instead, isn't there? So just pointing that out as a bit of perspective here if you're in similar circumstances regarding your view on Tesla. So we're going to remove the count for a start, and we're just going to look at a couple of simple things. Weekly time frame, linear scale. Okay, we're going to bring up the volume profile. Right, so the first thing we can see is that we've had a 1, 2, 3, 4, 5 wave move to a top. We've had a 3 wave move back, a return to trend, and now a continued move higher. Now, as an Elliott wave trader and an Elliottian, obviously no one believes more that the trend is your friend than we do, because that's what Elliott wave is. It's 5 forward, 3 back, continuation of trend. So on the simplest look, the simplest view, that's what we're looking at here in Tesla. Okay, so from a basic technical analysis point of view, we've had a return to trend and we're now moving higher. So point for the bulls. Right then. Sometimes the simplest of analysis can be your friend, and sometimes you can overcomplicate things. Now that doesn't mean I'm bullish, and I'm going to start to explain why. So from a moving average point of view, 10, 20, 60, 250, we never came back to test the 60. Price was bullish the whole time, even though it pulled back 40%. We came back through the 10 and the 20. We had a short-term crossover of the 10 and 20 trading averages, but then we had a return with the 2 trend with the 10 crossing back over the 20. You could argue that's another point, another feather in the bull's cap, for example, which is a positive. Okay, the next thing I want to look at is the volume. Now here's something which is definitely not in the bull's camp. This trend, this entire move into this peak has been on declining volume the whole time. And since returning to trend, if that's what we've done, it's only continued to get weaker. Alright. So that's the first thing you need to bear in mind. Now this could be therefore a 3 into a completed 4 with a 5. Now it's not uncommon to see a wave 5 complete on low volume. Most of the smart money is already come and gone from this big grander 5 wave move, and the trading volume will drop off as we peak in a 5, which only has to technically clear the top of the 3 before rolling over and crashing. Okay, now it could blow off. We've seen similar moves in Tesla before in wave 5s of lesser degree, but the volume peaked a long time ago. Back here on the 20th of February was the climax of the buying volume. Since then, it's just been declining. Okay, so you could argue that although price has gone astronomic, it's been doing it on less and less strength. I guess you could argue less and less behind this price rise. So return the trend positive, above moving average is positive, continuing decline in volume while price moves higher, negative point. So now, So now let's look at the RSI and the MACD. So the first thing I'd look at on the MACD, we're on the weekly time frame. Let's bring up the whole thing. Is we've got a series of declining lower highs. Okay, we went from overbought, but we never made it back to oversold. We came back into neutral territory in the RSI. So we didn't do what I like to call a round trip, which is overbought to oversold, which I like to see at larger wave degrees. Now we saw one here with this corrective move, okay, and we saw one here with this corrective move, okay. Now we never saw it. Excuse me, we haven't seen it this time. So bullish the underlying momentum has been that we never made it back to oversold conditions. So now I'm not suggesting that doesn't mean the correction is complete. It's just something we like to see. For such a sustained, large, time-consuming correction, one would like to see that move into oversold conditions, but it's not essential. It doesn't have to get down there for it to be legit. Now, so there's positive and negative interpretations here for the RSI. If we come back to a new high in price, which we are very, very close to doing, then until you take out this high, and this high, there will be negative divergence between previous highs in the RSI and current price action, not current high, because we can't call it a high unless we get a reversal. Okay, but we can say negative divergence between previous highs and current price action. So once we get that high in price, there is negative divergence in play, but it's not confirmed unless you get a high. One of the biggest mistakes you can make as a technical trader is to look at divergence, alright, and say, oh, we've got negative divergence, we're going to reverse. Well, you don't reverse until you reverse, and you don't say it's a high and count a high, measure a high until you've got a reversal. Price could just go, RSI could just go, sod all of you, take out all of these highs, and price could follow, and then any negative divergence you think existed has been cancelled out. Okay? And on that note, you could argue that there's a trend that's been broken here, and that we've had a move above a trend line. Now, it doesn't have to be significant. Like I said, we've still got these highs to deal with, right? And being a potential fifth wave, 3 into 4, we're assuming on the Elliott wave count, then we could achieve a fifth wave top in price on a divergent high. That would be quite normal, 3 to 5 divergence. Here's the 3. Anything below this high for the completion of the fifth would be a divergent high. That would be perfectly normal. So there's flexibility here in our interpretation of the RSI to support either the bullish count, weaker volume, weaker momentum finishing in a fifth, but there's also strong evidence to support the idea of a corrective move to new price highs on weaker momentum. This is why it's bloody confusing, and I'm not throwing money behind something that's currently confusing me. Like I said, there's 100,000 plus other assets elsewhere to go and trade. Why would you obsess over one thing? Now on the MACD, I feel a little bit more confident with my interpretation here that we've come back to the zero bound. Okay, we had this flush down in momentum. The averages, the signal and the average came back to the zero bound, a little bit below here for the average, and then we crossed back, bullish crossover, gaining positive momentum back to the upside. But I would be quite confident in assuming that we are not going to make it back up to here. So we seem to have this nice impulsive structure in the RSI. 5 waves up, 3 waves back. Now we don't perform Elliott wave counts on momentum, obviously, as they're not linear. Okay, but we like to see an impulsive move supported by momentum, and I'd argue that this 100% was, and that this looks corrective. So we would now expect to see the peak of the MACD to have occurred in the wave 3, and I think that's likely what we've seen, and I don't think a 5 is going to be able to make its way all the way up to here. It could. I think it could. It's possible that this is a larger wave 3 we're going into. I don't know. I mean, things are so crazy that anything's possible. You should never write off anything, but I would argue, my hunch would be that whenever 5 completes, even though price will be higher in this bullish scenario, we will have divergent highs in the MACD. Okay, and that would be a signal of a larger wave degree completion before everything rolling over. Okay, so that's the interpretation of the MACD. I would argue that I'm a bit more confident in analysing the MACD, saying we've peaked in momentum. We've peaked in the MACD. Can't say for certain that we have in the RSI, although it's very strong reading back here of 98. So we seem to have been building up this divergence for a long time, but if we start taking out these highs and it supports price action, then I'd say that's just flat out bullish. Okay, so that's the way I'm looking at the momentum indicators, that's the way I'm looking at the risk return to trend, that's the way I'm looking at the moving averages. Now the next little thing I want to bring up, and this is, you could argue, a point in the bearish camp, is if we look at this fixed volume profile since the previous. Now the reason I've taken it from the start of the prior wave 4, because this is a triangle, so we're assuming this is 3-4 of a lesser degree and this is 3-4 of a larger degree. Okay, now it's very, very, very normal for a larger wave degree 4 to pull back to within the price territory of the wave 4 of a lesser degree. Well, we didn't even get near it. Right, we've got this huge gulf here, and we didn't get to the top of it, let alone the thick of it. Okay, so that's, we don't have to see that. This is a guideline, not an Elliott wave rule. It's an expectation, but in this case, it's an expectation that didn't come about. Now, why didn't it come about? I'd argue that because the prevailing trend was more important. From a technical point of view, holding this long-term trend was more important than testing this node of volume back here within a wave 4, and therefore trend took precedent. Now if we'd come down faster into this, maybe we could have built a trend from there. We would have still returned to trend, we could have come higher, back to trend here perhaps, but see what I'm saying? But because we wasted a lot of time here, the trend, I think, took precedent, and there wasn't the opportunity to push the price back down to find support here, because this trend has been very strong. It's supported price here, 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 multiple tests of it with no body of any candle below. So the trend is your friend until it's broken, and in this case it hasn't broken. Okay, but once again we have to remember this move up has been done on low volume, so perhaps this isn't complete. Right, now, sorry if you're finding this rather mixed analysis frustrating, but this is why I'm neutral. I can't always come at you with a positive or negative view, and as I started the video saying, because I'm neutral, I haven't had anything to really contribute, I haven't covered it for a few months, but sometimes people just want to hear your take on things, and that's essentially what I think is going on, and I'm happy to give it. You just have to appreciate what I'm saying. Right, so now that we've done all that basic technical analysis, there's one other thing I'd like to look at, which is the primary pitchfork and the channel here. So this is the pitchfork I've taken. Now the trend line here we can remove because it doesn't work in log scale. This is based off of this initial pivot. Now we're in log scale now, so the chart looks different. When we saw that 1, 2, 3, 4 here with the triangle and the smaller degree, this now looks like this: 1, 2, 3, 4, 5. Okay, suggesting that potentially whatever this was, it was a completed larger trend of a 3, or perhaps even a 1. That's the other consideration we're going to talk about when we look at some of these, the corrective idea. Now we pulled back to the median line. We were determined to hang around it for as long as possible. Now we pulled back to the median line and we channeled around the 23.6. Actually, I'll tell you what, let's just get rid of that. Come back in to look at this pitchfork. Let's come into the day time frame, shall we? Okay, so as you can see here, We had support around the 23.6 from the median line on the downside. Same again here was another test, back test of the median line. We back tested the 23.6 on the other side, creating this channel. Hung around the median line again, back up to back test it again. Then we fell through, back tested the 61.8, fell through, back tested the 61.8, fell to the outer bound of the median line, of the pitchfork, and then we found support here at the outer bound, came back up into the 89, back up to the 89, broke the outer bound, back up to test the outer bound, fell, and we're climbing again. So whether or not this is still relevant has me scratching my head also. Are we looking for a back test of this pitchfork, right, which could still take us to new highs? So let's have a look. Let's put a line here on the high. You can see how we could come back to back test this outer bound of the pitchfork again, break to new highs, and still be bearish. This is how misleading things can get sometimes. All this pitchfork is irrelevant, and whatever was completed up here, and whatever completed down here, excuse me, and we should be putting a new pitchfork on. But where do we put it? Where's the pivot? There's no clear pivot here, and this is just because this doesn't look particularly impulsive. This is another problem. Okay, so we'll leave this in place since this represents the ATH, then so I'll just lock it. So blah 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 blah, Tom, you've gone on and on and on with your basic technical analysis. Can we get to the bloody Elliott wave, please? Alright then. So here's the best I can do for you guys, and until I see something more convincing, I probably won't be making a trip back to Tesla again until I do see something more convincing. So, unless of course you guys keep coming at me with requests that I do, maybe I will. But first option is a triangle. This is the bullish option, and it's extremely bullish. Okay, this is the idea that all of this was not a 5-wave move into an A. It was a 3-wave move with an extended C into an A. A, B, C into a B. A, B, C into a higher low of a C. A, B, C into a lower high of a D. W, X, Y is the best I can do into an E. And then this is 5 waves out with a back test of the downward trend for a 1-2. So we back test that downward trend, which is the top part of the triangle. We get stuck here, we get stuck here, we break through here, then back test here, and then since then we're bullish and we're moving higher into a 1-2, 1-2, 1-2, 3, 4, 5, 3, 4, 5, into a 3, 4, 5, into completed 5, into something like a 1. Okay, so this is crazy bullish, super bullish. Oh no, sorry, that would be into a 5, excuse me, because I'm saying intermediate degree. So we're saying, 1 to intermediate degree, eventually 3, 4 at intermediate degree, 5 at intermediate degree, into primary 5, cycle 1, big crash. But that could be well out into next year, couldn't it? So that's a very bullish case, suggesting that an extension has begun inside of the wave 5. Now, if you're going to have a double extension, it will be in the 3 and the 5. Now, whether or not you can interpret this differently, feel free to do so. I haven't put the time into this, to be absolutely honest, because I'm neutral on it and I can't pick out a clear impulse. It's just so much overlapping shit, pardon my language, but it's just getting on my nerves. So, in terms of wasting my time, we've got an overlap here, we have an overlap here, we have an overlap here. I think we have one here as well. So we've got multiple overlaps. So it's either an extension or this is corrective and this is impulsive. And I think that's how I'm going to lead on it, because I can at least cancel out a couple of the overlaps back here by doing that. I can cancel out this first overlap here by doing that and by calling it an extension. Trying to pick out a single impulse wave on a single wave degree, I just can't do it. I can't do it cleanly, and it doesn't look or measure like a diagonal either. So before you suggest diagonal, it's not contracting and it's not expanding at the correct rate either, hitting the measurements we would expect. So that's the best I can do from a bullish perspective. Right, so now let's consider a bearish perspective. Okay, so the bearish count calls for either a turnaround, the reversal at or very near the highs, so it could be any day, or we're going to go beyond the highs. Okay, so let me just show you that idea with a flat pattern. So this goes A, B, C, A, A, B, C, A of a lesser degree, A, B, C, B of a lesser degree, and then somehow in here, 1, 2, probably the best bet, 3, 4 to come, 5 into a B, and then 5 waves down into a C, taking us back in to that expected wave of lesser degree here. So this would likely mean that the 4 is not in and we've got further to go, or that the 4 is in excuse me, possibly, and this will be a short 5 completing a 1. Right. The other option is that 4 was in already, this whole wave degree is wrong, and this is a 1, and this is an A, B, C into a 2. But you see, like, if you start adding too many possibilities, you're not gaining anything from the analysis. So what we see here is, this is a flat pattern, it looks like to me. Okay, we've got an A, we've got a B that comes back to 90% or more in this case, but not beyond, and then potential 5-wave structure, which is ugly as sin, coming up into the C of the B, ready to turn around. Okay, that fits the idea. Here's the problem, and it's just another technical problem. Now we could say, maybe you could argue for a W, say this is 3 waves into a W, this is 3 waves into an X, and maybe we're going to do 3 waves into a Y. Okay, we can keep that as another alternate. Alright, so we'll say W, X, Y is a possibility as well. Let me just pop that on the chart. But we'd have to place our W here, I think, which would result in some kind of truncated C, if this is a zigzag, which we don't like, but whatever. X, we can't have it, we don't want to have an expansive X, so we would like to turn around before the highs. This is why I'm saying A, B, C first, because it accommodates the possibility of moving to new highs, whereas the WXY won't. But let's leave it there anyway. Okay, we'll just hide that. So that's that considered. So getting back to this expansive idea, so let's have a look at our targets for a wave B. So blue line, green line, yellow line, 123.6, 131.8, 161.8 expansions of wave A down to find a wave B. Right, so we could turn around at any of these points. Okay, if we did, we'd want to see reversal of conditions within the momentum indicators. We'd want to see a bearish candlestick pattern. We'd want to see a impulsive move lower on a smaller time frame. All the usual stuff we look for, and perhaps even volume increase on a sell-off. Because if it was a C wave, the C should have the volume and the B should be the one that's tricking us on low volume to the new high, and the C should have the volume and the sellers come back in force. I'd expect to see that at least on smaller time frames if we were bearish. Okay, so these would be your targets, and of course 90% to 100%, which is roughly where we are now. Great. What's the problem I have with this? Well, the problem I have with this is the length of this C. Because this came back to 90%, did not expand beyond the C. So this is not a running flat, this is not an expanding flat, this is a regular flat. And a regular flat, we would expect to see parity. Well, parity was back here at 796.05, and we've snagged at it, but then we've broken through. Right, so there's only one other target left in my mind now for the length of this C, which is where we would start to become suspicious of it being anything other of being a C at that point, and that's the 1.618 extension of the A. Okay, so if we take the length of the A and we project it from the B, our 1.618 brings us right smack bang into the territory of our 123.6 and 131.8. Now this is a log scale measurement. Is a log scale measurement valid here? Well, here's 500. Here's what's this? 530. 537, and here's a grand 15 roundabout. Okay, so 100% increase almost. So could you argue it's valid? Maybe, maybe not. If we come off of log, it becomes less valid because the 1618 then drops to here. doesn't reach any of our B wave targets, but then again, it doesn't have to. An expanding flat only just has to clear the high. It could just clear the high, gone through 90, gone through 100, just clear the high, hit the expansive target, then come down. But this is all unusual. If this was going to be a regular flat, an expansion to 90% would have been nice to see. But the problem is, a 90% retracement would not have been satisfied at 1-to-1 parity. We would have fallen short of that requirement for a regular flat pattern. So you see what I'm saying? It's multifaceted and complicated and not filling me with any particular confidence. I will rather go off and find trades that are filling me with confidence, to be absolutely honest with you. I sometimes wish I could just go back to the buy it, it's going up mentality of the new retail trader, and if that's the camp you're in and it's working for you, God bless you. I hope you make a lot of profit, but for God's sake, protect the profits you've made. Don't sit there in a losing trade. If it turns on you, enjoy what you've done, and learn from it. But for me, that's the best I can give you guys. I'm sorry, but that's the best I can give you at the minute. I'm not certain. The only thing which would convince me to become bullish would be... there's no way I'm buying it here. Let's just be absolutely clear about that. I mean, if you didn't buy it here, and you didn't buy it here, and you didn't buy this pivot, and you didn't buy this pivot, and you didn't buy this pivot, why the fuck would you buy it now? You've lost your mind from a trading point of view, because risk has been going up the whole time. Okay, so you don't buy it now, do you? The only way I would be convinced at all would be a significant sell-off that looked like 3 waves, and then it reversed into an impulse, and we had reversal conditions, shifting momentum, okay, support from volume, and an impulsive move on a smaller time frame off of a low. If I saw all of that after a pullback, I'd be like, alright, 1 in some kind of absolutely messed up diagonal or some crap like that, into a 2, now I'm feeling confident, because now I've got to stop. Okay, now I can protect myself on the downside. Here, there's no way I can enter this trade at the moment and possibly protect myself. It's still running, and if you enter a trade at this point, you're just chasing momentum. And you might be right, and you might be completely wrong. Either way, that's not good enough for me. So, neutral, and that's the best I can do at the moment. That's the options the way I see it. Like I said, if we get a significant pullback and then support from volume, shifting momentum back to the upside after a corrective move, all those great things, then I could probably be bullish. If I see a reversal here, and I see all the divergences I was talking about, okay, and I see a clear impulsive move down, 5 waves down, and then I see 3 up, then I'm going to start thinking the opposite. I'm going to start thinking, is there divergence here? Okay, is there an increase in sell volume here? Is there weaker volume here? Is there another divergent high? And then am I going to get, am I going to get bearish confirmation with lower lows? Okay, and all these other things, and then I'd be thinking maybe that's a short opportunity. And this is 1, and this is 2. But all of that is yet to play out, and I'd have time to assess all of that as it occurred. So that's it. Alright guys, I hope you've enjoyed this analysis. I hope you haven't found it too... I hope you found it useful on some level. I wish I could give you something clearer. Perhaps there are other analysts out there who've got it together more on Tesla than I have. Like I said, I'm not probably going to be coming back to this again anytime soon until I see something that convinces me of what the hell is going on. But that's the best I can do in the meantime. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment and share your own thoughts on the analysis in the comment section below if you want to. And thank you as always to my patrons. Your support is greatly appreciated. And all the best guys, I'll be back with you shortly. Bye bye.